Thanks for watching, everyone. For our latest Artemis Live video interview, I'm delighted to welcome William Ho, the CEO of MS Amlin Asia Pacific. Will, really good to see you today, and thanks for spending some time with me.
It's nice to see you again, Steve, and thanks very much for having me here today.
Great. So we're having this interview in the midst of the busy reinsurance conference season when things seem to be non-stop and people are traveling to meet with clients and meet with brokers, etc. It's a time when the focus is beginning to shift towards the year-end renewals and also the investment opportunities in reinsurance. And MS Amlin has been expanding its activities in the insurance-linked securities space in recent years with its differentiated Phoenix sidecar offering, which has become a regular feature of the market and something investors have looked forwards to with each new takedown offering. And today, with Will, we're going to look more closely at the Phoenix sidecar offering from MS Amlin, explore why this is such a great opportunity for investors looking for reinsurance returns, as well as for those experienced ILS investors who are looking for something differentiated that also offers some welcome diversification as well. Now, Will, to begin, maybe we should hear a little bit about the genesis of the Phoenix offering, so why MS Amlin decided to follow this route.
Yeah, well, thanks, Steve. I think the journey started kind of back in 2019, back end of 2019, going into 2020. We started looking at the ILS scene, personally trying to get a bit more educated as well. Being based in Singapore, we also had the cat bond grant scheme launched by the MES that garnered a bit of interest, and seeing whether or not we could use that ecosystem for a transaction that we could launch. At the same time, we met up with an old acquaintance at HSZ ILS Advisors. That was also a Asian ILS fund trying to scale up a bit during the same time. And we had essentially an aligned interest to see whether or not we could bring some of the Asian business that we are writing from a reinsurance perspective into the ILS market and introduce a product to the market. As you mentioned, it was something that was a bit different, a bit diversified against a peak zone product. I think during that period of time, the peak zone products were also having a bit of a challenging period of time, given some of the frequency of losses happening in North America. And whilst there was a bit of skepticism whether or not we could get something like this done, we felt timing was right, that despite it being quite a challenging time to try and raise capital, the diversification played as something bit different play, encouraged us at MS Amlin to push forward with this kind of a project in the region. We felt it was a bit innovative. We wanted to challenge the norm and establish some expectations down the line as well.
No, that's good. So, looking back, how challenging was the first offering for you, and has this actually got easier over time?
Yeah. I mean, we've had this question asked before between you and I always be the same answer. You know, the first one was really challenging, I think, both from needing to get educated, lots of discussion with kind of different legal counsels, learning how to set up the SBRB, kind of interacting with the regulator and selling the ideas, as well as then going to the small task of raising the capital. So certainly, you know, that was the first transaction was a great education process. It was definitely challenging, but fulfilling in the end. Has it got easier? I think certain parts has got easier. You know, I think I'll be a little less glass half full in the past to say it was always challenging. Certain parts definitely got easier, particularly in terms of the application process, the discussions with the regulator, the discussions with the different legal counsels to ensure that everything's done right. That part definitely was gotten easier. I think the area that always remains a challenge is the kind of uncertainty on the business mix, the portfolio mix we have with investors, and that conversation that we need to have, but also trying to ensure that we get the right attention time, right exposure to be able to advertise and sell our offering at that time. That, I would say, probably remains difficult each year, but I think rewarding transactions or fulfilling transactions are never supposed to be easy, right? You know, it's with the challenge comes the reward.
Mm. No, definitely, that's correct. And
Yeah.
it's interesting because you're, I think, now the most frequent repeat issuer in Singapore of an ILS transaction, and obviously being a quota share vehicle as well, it's a little different to what the regulator was used to. So it'd be interesting
Mm.
to hear what your experience has been like as a repeat ILS issuer in
Yeah.
Singapore.
Yeah, well, yeah, we're going into our fifth year now, so we've had 4 years of transactions on the trot. I think, looking back, we've raised over $160 million over that period of time, averaging between 8 and 9% return on capital. From an underwriter's perspective, we've seeded over $30 million of premium into these vehicles and generated less than $1 million of losses. So. We feel like the result and the track record is building, and that proof of concept now is turning into a transaction that can show it's got track record and it's got some longevity in it. The being a repeat kind of issuer in ILS, repeat ILS issuer in Singapore. At least when we go knocking on MAS's door, they recognise us and they see, and they welcome us back each time. They've been very good and accommodating to our requests in the past, and we're very grateful for them for accommodating kind of our repeat issuances in the region. I think the interests are very much aligned in trying to advance the ILS transactions in this region. I think it's very much the volume of transaction here is a fraction of what is done in the bigger ILS hubs of where it's Zurich, Bermuda, kind of US and London. So we would want to kind of help do our share to keep pushing that forward. We were very happy in 2024 at the start of this year to be the first one to renew a bond. Prior to that, we launched a new one each year, but this year we did look to launch a new one, and I think the real kind of challenges that we've learned to overcome there was to learn how there was a lot of potential inefficiencies to setting up a new SPRV every year. So for this year, when we renewed the bond, we knew that we had to bring a bit of innovation to how we did it in this local market. And for our renewal this year, we actually decided, okay, normally we would issue a 3-year bond, and we extended that to allow it to be a 10-year bond, and that would get actually increased flexibility for our investors to be able to come on and off each year on a yearly renewal, subject to the capital being replenished. So that does allow for a bit more flexibility. We felt it was a bit innovative within the ecosystem we worked in, and we're looking to continue that strategy going into 25 and beyond.
No, that's really interesting to hear. So you've actually been working to make this a better partnership with the investors as well, which is good. Maybe we could focus on the sort of the offering benefits for the investors as well. I know it's obviously an aligned capital approach, being a quota share arrangement. But perhaps you could explain what investors are actually getting through their allocation to Phoenix.
Yeah. We would put it as it's about 200 to 250 mini cat bonds put together. Each individual one would not have enough critical mass or size to warrant setting up going into the ILS market on its own. However, we've created a portfolio of mini cat bonds, a bit more remote risk across the region. We've built that portfolio over the years and shaped that portfolio to our underwriting appetite. We can show that there's a good track record on there. And as you mentioned, it's a quota share arrangement. So we take a large part of we take our fair share of the risk there as well. All the bonds, all the kind of sidecars we have issued, they are private cat bonds domiciled in Singapore. Most of these mini cat bonds, I would call them, are predominantly single peril risk layers. There's limited clash to the risk, and that gives a lot of capital efficiency in the transaction. So you're not just having to use your capital for just one territory or one peril. Actually, there's multi-perils, multi-territories that more are generally non-correlating for that portfolio. We are kind of underwriting at MS Amlin through and through. We've been in the region for a long time, and we have confidence in backing our underwriting strategy that comprises of this portfolio of risk. And as I mentioned, I think with the capital raise to date, having seeded over $30 million of premium with less than $1 million of claims over that 4-year period, we think it's a stable investment opportunity. I think we've been lucky enough to see that there's been liquidity in each transaction. There's been secondary trades on each one, on every transaction that we've launched to date, and it doesn't cover any peak zone coverage, whether that's US or Japan or Europe. This is pure Asia nat cat perils exposure portfolio. So that feels that we can offer investors something different, something that whilst it's different for them, it's our bread and butter. It's what we do on a daily basis, and it is kind of what we are here to transact and build for the long term in the region.
No, that's really interesting, and great to hear that it's traded successfully in the secondary market, as that's a real sign of acceptance by the investor base as well. But you mentioned performance a little earlier and said it's been good, but perhaps you could talk a little more about how the returns have been over the sort of 4 years of the structure so far. I know we're probably the fourth iteration hasn't yet finished, but
I think on an annual return over the 4 years, with the 4th year still a bit to run, still a bit to go. It's around between 8 and 9% annual returns. I think in the earlier years, in 21 and 22, 21 in particular, that the money market funds was obviously a bit lower in terms of the interest rate environment, and so that was more generated at underwriting returns. And then kind of in 22, 23 and 24, the interest rate, the money market funds have contributed to pushing the last 2 years more into double-digit returns. But if you take the average, we think it's generated an okay return at around 8.5% per annum. Okay, we think it's on track to do the same again this year. Obviously, there is still a bit of time to go, and then I always kind of want to bring back some of the underwriting perspective of this. We do our rigors. We do make sure that it's a well-balanced portfolio, and we do underwrite it as if it's our capital, our own business, which half kind of from a quota share arrangement it is in essence, and we want to ensure that the underwriting kind of is profitable first and foremost, and then anything extra is almost additional bonus.
No, that's very attractive returns for a fully diversifying opportunity for most ILS investors as well, given their focus typically on the US. And you've also been tested over the years by some fairly large catastrophe events, but that hasn't really dented the returns, it seems.
Well, there have been some claims, not no claims, but they have been quite minimal, and that's kind of in part down to kind of disciplined underwriting, making sure that we select our risks as carefully as possible. I think there has been some other transactions in the region. Some have been impacted. Others that have kind of ran clean haven't been renewed. So we feel like we are a differentiator in that we have shown consistency in our desire to continue doing it. We have shown resilience when there has been kind of catastrophe losses in the region, and we can show that there's been a resilience against those losses, whether it's been some small amounts to it, to some events where we can say actually where we're attaching is much higher than that event. I think it's testament to a diversified portfolio, but we can't remove from the fact that first and foremost it is kind of the underwriting that helps us select the risk carefully and ensure that we've got the right risk in that portfolio. And it further emphasizes it's a long-term product for us. It's a long-term journey. We want to underwrite for ourselves, and we also want to underwrite for our investors for the long term in the region, and grow and evolve in this region together. We don't think it's a capacity-driven transaction. We want this to help develop the ILS market for ourselves, for our investors, and for the Singapore Hub and Asia region as a whole.
I think that's a really good way to have entered the market and a good mission to have, Will. The
Mhm.
investor base clearly wants long-term partnerships and wants to find people they can partner with who have sort of good underwriting discipline, but can give them
Mhm.
access to something that enhances their portfolios as well. And it seems that
Yeah.
Phoenix is really doing that. It's also a really good demonstration of continuity as well, which is really critical, I feel. What's your feeling about that? Are you getting good feedback from investors on the fact you've brought these repeat transactions now?
I think so. You know, when we go and visit them, they do quite like the fact we keep going and we want to keep building. You know, I would like to say, you know, it's like Phoenix is not. I say it's not we don't. It's not a capacity-driven transaction for us. You know, we
Mm,
MS Amlin is owned by MS and AD. You know, we do have a strong balance sheet, so this is a desire to have partners for the long run and bring more parties to our long term journey. It's not an it's not a case of trying to use the capacity. So I guess that's where sometimes I do see kind of the investors align with us when we're not looking at just, oh, we'll take every dollar of capacity where we can. You know, this is a journey. We want you to hear our journey. We want you to hear our vision and strategy, and we want you to be aligned with us for that. And help build a long-term relationship. For our investors, we want to be their primary access point to Asian catastrophe business. You know, it is a region that there hasn't been too much less transactions, and we want to help some of our investors be first movers in this area, preferably through us rather than others. But you know, this continuity is going to be important, and we're 4 years in. Hopefully, it's 4 years part of kind of many more years ahead. I think this is a start of a good journey, and we want to develop ILS in Asia and help mature that segment of the market in this region. I very much see it as a hybrid model of traditional balance sheet and alternative capacity. It's that hybrid model is here to stay, and we want to be part of that. We want to emphasize and advertise that journey on the way.
no, that's really positive way to approach the marketplace. And perhaps finally, you could talk a little about how valuable sort of the partnership with investors has become for the company, and maybe a little bit about your strategy for the future with Phoenix.
Yeah. So, I mean, I think for our investors, we just need them to know we carefully select, underwrite, and build a portfolio. It's not transacting risk and passing it through. Like we want the investors, as I mentioned, to understand what we're trying to do and align with our interests. You know, we will explore this region with them, and then the more exciting part there is the Asia markets, the different number of developing markets here. These will change. They're forever evolving. They change. They have changed a lot over the last 15 years, and they will continue to change a lot over the next 15 years. And as and when that evolution occurs and those changes occur that needs further capacity, we want to be front and foremost, to be the primary, to be first to be able to access that increased demand in reinsurance and be able to use both our capacity and our investors' capacity to go offer the right solutions to the clients. You know, we are looking to grow to continue growing Phoenix. You know, each year we've moved on a little bit more forward. You know, this year I have some aspirations in my mind, which I don't want to divulge, I'm afraid. You know, I don't want to jinx it, but we want to continue moving forward. So we want our current investors to continue supporting us, and we welcome to have new conversations with some new investors that feel, you know, we like to know a bit more about it. You know, for me, the Phoenix strategy and the offering that we're giving through from MS Amlin through Phoenix is, there are three things that I want to achieve, hopefully in the next 12 to 18 months in the short term. You know, so one, increase and scale and grow our investor base, you know, through established ILS investors and hopefully some more Asian-based non-ILS investors too, and convert convert their intrigue into material interest. As the size increases, we maybe look to widen the scope and participation, to ensure that our seeded client base gets better access to our Phoenix capital. And then third, and probably most importantly, to continue that good chain of profitability for our investors, to ensure that they are kind of investing and supporting a product that does work for them, both in the short run and in the long run.
No, that's great. And it's very interesting you mentioned there that this is a good opportunity for investors who are looking to get into a region where the opportunity keeps growing as well, because obviously insurance and reinsurance penetration in Asia Pacific is expanding all the time. So structures
Yeah.
like Phoenix seem to be a good way for investors to potentially ride that market growth through the future as well. So thank you, Will. I really appreciate you spending
Okay.
some time with me today. It's been great to get a better understanding of the Phoenix sidecar offering and great to chat with you again.
It's great to see you, Steve. I really appreciate the time here, and thanks for the great questions. And we look forward to speaking again soon.
Yeah, hope to see you soon. Cheers.
Okay. Take care. Bye bye.